Hey guys, and welcome to Brett's Property Rants. What is it, the 17th of March, 2020. So yeah, today's really good actually, because it gave me a chance this week. There wasn't actually a lot of news. It wasn't a lot coming out, unlike previous weeks. But the good thing was, what I've been able to do is go back and look at all the predictions and really make a case for why I think this year property's back on the agenda. And I think really we're at the start of the next cycle. Yeah, so I think that's important because we've just come through effectively a downturn, and yes, it was self-enforced, and yes, I think it was overdue to a large degree in a lot of places around the world. But I think the UK, and as you'll see from the stats, the UK didn't perform overly well, and it hasn't performed overly well for a number of years. And because of that, and this is why I've been saying I don't think we've got far to drop. I think you've got to factor all that in. So today, what we're going to look at is the case for why 2021 and in fact the next decade. On the proviso that the government keeps doing what it's doing, keeps supporting and keeps, stimulating and, investing in not only just London and surrounds, but actually up north and get that northern powerhouse really working, And I mean, we've seen, the plans there. If they keep doing that plan, then I'm going to be a happy person, And you guys, as property investors, are going to be happy people, So what are we going to cover today? Well, we're going to look at the Kiwi, Jacinta, who basically said, house prices can't keep growing like this, And I actually agree with it, and I disagree with her. And actually, in fact, what she said was correct. But yeah, we'll talk about that. UK house demand, and I think is really important. I think demand right now is huge. Yeah, I've actually put a few of my properties on the market just to get rid of them, just in places that I don't think are going to grow too much. But amazingly, there's a lot of activity, so they think that we'll get rid of them pretty quickly, but we haven't seen the house prices grow. So we'll look more into that. GDP predictions, because I think this is, and not just UK here, I want to look around the world, because at the end of the day, it's all good to say UK is fantastic, but what's the rest of the world doing, okay? Vaccine success, and I think really not just vaccines with an S. Multiple, plural, yeah? And that's good news for everyone. Travel returns, travel is starting to return, so we'll have a look at that. And Birmingham Spotlight, and also the kids actually finish school early on Wednesdays. So because I've got the live stream, I haven't been able to spend much time with them. So I'm moving it to Tuesdays, okay? Because they've got no after school activity. So I'm gonna move it to Tuesdays as of next week. Okay, so just a heads up, but we'll run through that again. But let's get into it. So yeah, before we do, guys, make sure you subscribe, like, I'm starting to get back into doing a lot more videos now, and so more educational videos. I'm doing a series right now on regeneration, and I think that's really it's really exciting actually, because when you look back at the last 17 years, because that's what I'm doing, of some of the regeneration successes, it's amazing how those large-scale regeneration programs picked really well have performed better than, say, just the odd development here or there, okay? And certainly, the major cities have performed a lot better than, places all around the UK because of that lost decade that we had with the austerity. But I think that's important. But anyway, yeah, like, subscribe, and yeah, I'll bring you more new content. So what happened after Jacinta Ardern said house prices can't keep skyrocketing? Now look, bottom line is that they went up in value by 55,000 New Zealand dollars, which, is quite a substantial amount between November and October, 12 months to October, yeah? But look, this is what happened. This is the actual thing. So when you look at that, yeah, that is an incredible growth, because we're talking about from 40,000, yeah, in April to 120,000, that is average, So this is just extraordinary growth, And you're right, they cannot keep going up by that. They've massively outstripped, wages, and really the problem with that, when that happens, it's great if you own property. Yeah, not so fantastic if you're trying to get on the ladder. But the problem is, then what you find is it shoots up, but then it actually will stagnate. Yeah. So is that good for the market? Not really. It's good for the wealthy people. It's good for people who get in and get out. Yeah. And then sit around, and put it in other asset classes or things like that. But the reality is that's not actually a well-functioning market. Yeah. And in fact, a lot of that now is, and it's happened in the UK, Australia as well. So this is, a number of markets have actually increased dramatically. We're not talking, the 5 or the 4.8% or 7.8% or whatever. It depends on who you believe. Figures. I mean, That's quite interesting. That can't happen, it can't keep happening. And I agree with her on that point. But the reality is it can happen over a short period of time. Yeah. And oftentimes that is what happens. Sit around, boom. And the problem is most people wait until boom, or should I say boom. Yeah. And that's where they get in. Yeah. And that is the problem with zigging when everyone else is zigging, and zagging when everyone else is zag, and buying when the newspaper says to buy. So guys, by the way, any questions you've got, pump them into the comments. I'm happy to answer them as we go through. Or any comments, anything you want to do, happy to address it. Okay. So let's look at house prices. So house prices rises. This is UK now. All right. So you can see, this is Halifax. Okay. So they are looking at mortgages. Yeah. Mortgage approvals effectively is how they source their data. They're not so much from, land registry or things like that, which might be actual prices. These are based on people applying for mortgages. But you can see, UK 12% from March 20 to February 21, 12% change. Southwest 17%, East Anglia 15, 14, 14, 14, 13, 13, 12, 10, 8, 5, Greater London 5, and Scotland 2. Yeah. So, there's some pretty big figures there. Now, does that play out in the real world? This is the challenge. This is averages. Yeah. And when you play with averages, your portfolio may not be part of that average. I mean, I've just been valuing some of the properties and that sort of stuff that I have. And some of them, I'm like, come on, we've had all this growth last year. Where is it? I'm like, it hasn't done anything. And it's because in that particular area, it's not particularly, it hasn't particularly benefited from anything to do with COVID. If anything, it's been subdued. Now, sure, activity's picked up now. And in fact, it has picked up, which is good. So we're likely to see house price growth. I predicted the 3% drop, if you remember, middle of last year or towards the, whatever it was, August or whatever. I think I might be wrong on that. I think I might be too conservative because of the government changes. I wasn't expecting them to be, so I wasn't expecting COVID to go on this long with the lockdowns and things like that. I wasn't expecting them to handle it the way they did, which I think is a great thing. But I don't think it's going to be huge growth necessarily, but I think we're looking more now probably towards the +5. It may be more. In some areas, it probably will be more. Yeah, and that's what I said last year. It was +3, but it might be -5. Oh, sorry, -3. Might have been -5, +5. Now it's probably more etching up to where I'm probably thinking more +5. But I'm not going to change it yet because I want to see what and look, I want to see what happens through the next 3-4 months. Yeah, because we've got the spring bounce now. So market always bounces back as the weather gets better, and we have this sort of 6-month period where things are good. Then we might see some, property slow down and all sorts of stuff. So it depends what happens in the next 6 months, but I think it's going to be quite good. UK house prices, rise amid big demand imbalance. So basically, this is just talking about demand. The demand has been effectively the highest it's been in over 10 years. Which is huge. That's great to see because it's been subdued for 10 years. In fact, it's been subdued for longer, to be fair. So yeah. But you've got boom year for house prices. Surge in buyers. Again, you've got a lot of this stuff that's coming out now, and it's hard to see any real risks to this. Now, possibly the biggest risk is that there's all this money floating around, and that gets soaked up, in various assets. And then what happens? Inflation starts to kick in. Inflation then, interest rates go up and these sort of things. But we're not seeing that yet. If that's happening, we're seeing it in 2023, and beyond. Yeah, not for the next 2 or 3 years. So I think at least for the next 2 years, interest rates are going to stay very low, and governments are going to make them stay low because they don't want them jumping up too much. All right, because the last thing they want is to stunt back growth. They want to return back where they were. So if you look at this, this is interesting. This is the projected size of the economies, 2019 compared to 2020. So pre-pandemic to actually after pandemic. Now, if you have a look, UK there has the biggest. When we're talking about the largest economies, we're talking we actually fared the worst. We come from a really low position. We got hit hard. And unfortunately, that's the reality of the situation right now. So we've got a low base to come from. In some ways, if you think about it, if we're coming from such a low base and we had such, a dramatic thing, part of it is that we could actually see tremendous growth. We could see house price growth at sort of 10 or 15s, for a couple of years, which I'm not suggesting that's the case, but that is possible. And that does happen, when you have a huge drop, that you have a huge thing. Do I think that's going to happen? I don't. I think there's enough fiscal and monetary policy intrusion in the economy from the government side that actually they won't let it happen. And if it started to get up too much, they'll probably suppress the market. They'll bring stamp duties in or whatever. But it's good news. As I've said from my budget review and things like that, there was no negative really. And I think that's important. Let's have a look at that was the UK before. This is actually the real GDP forecast for the world. So you can see there in Q2 2020, it dropped considerably. We're talking the 100 is the base level. So you can see we've dropped Q1, Q2, Q3, Q4, and now we're in 2021, and it's about where we were before COVID. Okay, so things are actually looking pretty good, and now they're predicting growth all the way through to the end of 2022. Yeah, and this is GDP. This is the worldwide GDP. So this is effectively all the goods and services that all economies make. Yeah, and that's pretty good news. So what it means is, from our perspective as property investors, we've got at least the next 2 years where we're probably going to be sailing pretty. And as long as the government doesn't come in with new stupid rules and taxes and things like that, we should be sitting pretty, and we should see some good capital growth. We should be able to rebase ourselves. We've had the tenant fee ban, we've had all this tax, Section 24 tax, all this sort of stuff. We should be able to get back onto an even keel. Plus, we should be able to recover some of that lost decade, hopefully, where basically no investment was happening and nothing was happening in the rest of the UK. So I think that's important because it has been a bloody hard few years, and even before that with austerity, it wasn't the usual healthy property market that we were used to. If anything, the Tories destroyed all that. Yeah, and hopefully now they're getting it back. Let's have a look at GDP. So this is GDP before, during, and after, and obviously this is predicted, GDPs for a lot of them. Now, interestingly, if you have a look at the UK, 2.8, then down to 2.6, back up to 2.9. So we're going to grow to 2.9. India, 2.9, yeah, 2.6, 2.8. So in actual fact, India has fared worse, and we've jumped ahead there to make us the 5th largest economy again. France has done well. Yeah, China's still doing very well, and they've done extremely well through COVID. As they proved in their lockdown, the reality is that whole lockdown sequence, which everyone denied and everyone had a go at them for, it worked. And it stomped it out effectively. And it's worked in Singapore, it's worked in Korea, it's worked in most countries that have done it. And the countries that haven't, even Sweden, which was the poster boy for, this is how we should do it without locking down, even they're saying, well, actually, it didn't quite work out. Well, didn't work out, So yeah. So Rach, so yeah, so larger mortgages and higher house prices in recent months, especially outside of London, may in part be due to greater demand for larger houses. Yeah. It could be 100%. And look, the interesting thing with this whole thing is, as much as there was, I think it was, I can't remember, it was 8% of the population moving out of London. Actually, already we're starting to see things come back into London. Businesses are starting to open up. What the government did by giving them certainty, it allowed then businesses to make decisions. So now people are coming back to work. They're, moving towards opening up. And actually, that's a good thing. So actually, I think we'll see that the markets will start to come back. And we're already seeing this with, the new build developers we work with and how many inquiries they're getting. People are moving back in, even some of the places now. It's amazing. If you think back, say, a month ago, we were talking about how, London rents were dropping. And make no mistake, London rents have dropped, okay? Not by 15 and 20% like some people, that's more central London, zone 1s. But when you go 3, 4, 5, it's not so much. It's probably 5%, maybe 10%, okay? But what we've started to see now, and this is, we used to be able to, they give 4 weeks notice, okay? And then what we do is we work to 30 days, and I basically say, 6 weeks for your void period, plus that. So 10 weeks full marketing, we should have something 100%, Yeah. But internally we work to 30 days. Okay. So we have 30 days while the tenant's still in there, and then 30 days after. It's amazing how we used to be able to do viewings. Now, virtually no one is letting us get into viewings, due to COVID restrictions. So what that means now is day one, when the person moves out, we get the house done and we're having mass viewings. And what that's doing in a lot of cases is, if we pick the rent right, we're actually getting 4 or 5 offers. So then it becomes a negotiation. And so the team is one of the things the team is saying is, actually the demand is increasing as long as you price the rent well. I know we had, it was in E1, East London, and at Tower Hill. And basically in Tower Hill, what was happening is there was 3,001 beds, on the market, because, that was serviced apartment central. And now a lot of that's gone. So, it took a while, and, so it had been on the market with another agent for, I think, 3 months. We took it over, and, the expectations were up here, and we just had to bring it down. And then finally we got it there. And actually, when we finally got an offer, we were able to get it up a little bit higher. Still down, still down on what their expectations were, but we still got it rented, And so things are still renting, but rents have dropped. But I think we'll start to see that coming back, and we already are starting to see the market moving, people coming back in, the demand for London properties coming back. So I think, we will start to see that market get back. And make no mistake, London is robust enough to handle this. London's not dead by any stretch of the imagination. Yes, some people moved out, but you know what? There's plenty of people waiting in tow to move in. And especially now with these 5% mortgages, that's going to be extraordinary, for the new build, not the new build, the first home buyers. Definitely try and get hold of that if you can, if that's something, you're interested in. So moving on, if we look at growth predictions, so you got global economy, okay, you can see, minus 3.5, 5.5, 21, 4.2. That's kind of figures that you would expect, probably a little bit higher for the global economy. But when you go to advanced economies, 4.3 and 3.1, that's actually double what you would expect realistically. You're probably looking at around about 2%, all right? So that's actually pretty good for the next 2 years. Things, and understand, we're just layering this on. Now, developed and emerging, they're 6s. That's probably, about where they should be as well, But what a lot of it is doing is, we were here, it dropped here, and now, whereas we would have expected it to be here, now it's being here. So we're recovering some of that over 2 years to get us back to where we were, and effectively negate the effect of COVID, apart from the fact that we've lost 2 years, 3 years including the COVID. So, from that perspective, things are looking pretty good. And understand, this is a layer upon a layer upon a layer upon a layer. So if it was just one bit of good news, the budget, great, fantastic. But when it's this and the predictions and these people saying this and these people saying this, people saying this, and then another layer is, COVID vaccines per 100 people. You can see, Israel, they've gone hard at it. UAE have gone hard at it. UK, 38.39 per 100 people. So we're already at 40% of people vaccinated, and a number of those obviously would have had it as well. So we're getting towards that herd mentality. That's something different. Herd immunity, relatively quickly, and we've done bloody well. I mean, if you look all the way down the bottom there at Australia, 0.65, they've basically gone, you know what, we'll have another Barbie. We're okay here. We won't let people travel in. We'll put them away for 14 days. And actually, to be fair, even when they tried to, some of their vaccines were said, no, you don't need them. We're going to withhold them. So the EU has sort of, seconded that vaccine stuff, which, fair enough. That's what they've done. Interestingly, and so this is what a lot of people don't realise is it's so easy because we're on social media and things like that to sit there and go, actually, you know what, things are pretty crap and things are terrible and, global crisis and climate change and all these sort of things. But in actual fact, things are getting better and better as a society of humans. If we look at global vaccinations, the amazing thing is we look now 88%. If we went back to 1980, what you're going to see is actually a lot of those are around 20% or nothing. Tuberculosis has been around for a while, so that was at 88%. But a lot of these other ones, now to be fair, this is 2019 data, so there's no COVID data there for vaccinations, obviously. But things are getting better from a global vaccination. People are living longer. Yeah. Now, interestingly, if we actually look at that, well, not same graph, but a different graph in terms of infant deaths, because this is one of the ways that I look at how society is progressing. When we look, you can see there, in 1990, versus 2017, the number of deaths, 12 million children under 5. So when we talk about infant deaths, it's always pretty much under 5, okay, die before their 5th birthday. So, you've gone from there to around about 5.5 million. Yeah, and a lot of these are because of preventable deaths. Okay, and you can't probably read it there, but these are things that you can vaccinate for. All right, so things are getting pretty good around the world. People are living longer, which means actually, and this is one of the great things about from a population perspective, because if we hockey stick the population, it keeps growing. We go from 7 to 14 to impossible. Actually, that's not predicted. That's not what's going to happen, because we've raised so many people out of poverty. Yeah, that actually now means they don't have to have as many kids. So the population starts to drop. Not drop, but not continue growing exponentially. And I think that, and there's a whole heap of other reasons. And as I said, layer upon layer upon layer upon layer is actually building this good news and hope, in the future. So I don't think it's all a miss, and actually, as much as, some people may be sitting there thinking that Bill Gates has, put microchips in the vaccine and, there's no way I'm taking it. I mean, rubbish, I don't believe all that sort of stuff. Another layer, okay, if we look at another layer. So this is Nick Lim. Nick's a mate of mine. Hey, Nick. So Nick he runs a travel, effectively a travel expense company, and what they do is it's a software as a service. So they work with a lot of government departments and things. And one of the ones they do is they have a piece of software that looks after government travel and social service travel. Now, they've had a 25% year-on-year increase in users. Yeah, which is massive. Now, this is in Australia, okay? So he actually lives in Singapore, but basically his company's in Australia that he's chairman. But, the amazing thing is, when you look at that, that's a 25% increase from COVID, yeah? So the bounce back has started to happen already in travel. Now, admittedly, this is mainly domestic travel around Australia, but things are getting back on. China's doing the same. It's slowly starting to come back, yeah? And I think that's important. If we look at Singapore Airlines, okay, so the Singapore Airlines, obviously, these are they were I believe the only profitable carrier going into COVID, all right? So you can see there, this is over the last year, all right? So you can see COVID hit pretty hard, yeah? So it was down below, 4 something, and now it's up to 566. Now, if we look over 5 years to have a look, to include the COVID, you can see COVID there where it dropped off, but now it's coming back. So it's almost back to where it was pre-COVID. Yeah? And that's for an airline, and yet we haven't opened up. The quarantine's still there. All this sort of stuff is still going on, but things are looking up. A lot of these businesses have pivoted now. Yeah? And that's good news. It's good news for travel. It's good news for everything. I mean, I think there will still be the travel passport. I know Australia and Singapore are talking about a travel, recognition of the vaccination passport. If you're not going to get the vaccine, then I think you're going to struggle to travel to a lot of countries, moving forward. The other one is IAG, which is BA, basically, the company that owns BA. If you look at that, that's over the last year. Again, it's started to come back up. If we look over 5 years, you can see it's a bit more of a drop, okay? And it hasn't come back yet, but the reality is everything's been locked down. So maybe, BA will follow Singapore Airlines, and start to come back up as travel comes back, So, this is layers upon layers upon layers of good news that's building that foundation for you as a property investor and your property, to grow in value. Yeah, there's the free ports we spoke about last week. There's all these sort of things which are just layering in the good news to actually build the foundation to have house price growth. So if you're sitting there and you're thinking, what, I was unsure, I'm not sure, not 100%. The best thing you can do is actually jump on webinars, chat to the team, and actually work your strategy out for the next 10 years, because actually there's going to be some, and I think it'll be a great decade. For me, the decade is now set up to do really, really well. Yeah. And that doesn't mean that, specific areas are still going to be crap and you don't really want to invest in them. I still believe that you want to stick to in and around the major cities, don't get drawn out to think you want to buy a 3 or a 5 bedroom house or things like that, because actually that's not where, and in fact in London, it's funny, that's not where the demand is. We had a couple of 3 bedrooms and we had to drop them significantly. Yeah, the 1 bedrooms, rent like that. 2 bedrooms, similar. But the 3 bedrooms and 4 bedrooms and even 5 bedroom, in fact, we've got an 8 bedroom HMO that basically they've converted it back to a family home, because it's just the hassle of not only the licensing, but also all the COVID restrictions and having, 8 people in there and et cetera, et cetera. It's just too much for the landlord. They've just gone, you know what, I'm out. I'm just going to put it back. I'll accept my less rent, but you know what, I don't have to have the hassle. So, now's the time to really start looking and getting serious about it. So, yeah. But in any case, if you're interested, next Tuesday at 5 p.m, so I'll be coming to you, wait there, oh, yeah, I need to be there. I'll be coming to you at 12:30, and at 5 p.m, Rit and Dan are actually running, why this bull will buck the bear. So basically it's looking at the Birmingham property market and why it, over the next decade, is going to do really, really well. It's got big city plans, and and that is actually the name of their plan. But 23rd of March, so jump on. If you go to gladfish.com/webinars, you can sign up to that. Look, I recommend, if you're interested in getting involved, go, or even if you've never actually looked at how we launch and how we go through cash flows and how we do the due diligence and all that sort of stuff, it's great to jump on there, because actually they're going to be going through not only the whole of Birmingham, but we're going to be looking at a specific development that we've got in Birmingham that actually, great development, fantastic development, in the gun wharf area. Okay, so I think that's, that's worth, if you haven't done it, it's a great thing just to go through that whole process with the team. Yeah, and we'll be, the other thing is we'll be doing one for Manchester, and we're basically doing, it's a spotlight on property hotspots series. So we'll be looking at all of the areas we think are going to see growth and where we're looking to source property. So every second month there'll be a seminar doing exactly this, promoting exactly this. So yeah, so that's something to look out for if you're interested. If you're thinking, should I jump into the market? Should I get something? Look, I think now is the time to do it, and I think now, because of all these layers. Yeah, now's the time to build that layer, build that strategy, get a plan together, and then actually start executing it. Yeah, because I don't think prices are going to be like this very much longer, and I don't think prices are going to stay like this very much longer. I think we're going to start to see growth, and consolidated growth year after year after year, because of the change in attitude with the government, which is, it's a bloody good change. So yeah, the other thing, which is, we're moving to Tuesdays. So I mentioned at the start, if you've been watching this and you've been scheduling in for Wednesday, schedule in the same time, but on Tuesday now, okay? And that's just so I can spend more time with the kids, but we're doing exactly the same thing. But yeah, so from next week onwards, we'll be here on Tuesdays. Yeah. So guys, that's it for me this week. If there's any other questions, feel free to pop them in the thing. I'm happy to answer them. Otherwise, you can always email me at webinars@gladfish.com. And happy to record videos, answer those. If you're interested in learning more about how we do things and how we help out in that, gladfish.com or EasyTrack. Gladfish.com is the property sales and portfolio management arm, and easytrack.co.uk for lettings and management. Otherwise, obviously, you're either on YouTube or Facebook. Come to here every week, as well as the other videos that I'm putting onto the YouTube. But yeah, guys, have a fantastic week. Thanks, Chi. Awesome. Have a great week, and we'll see you again next week. And hopefully, the good news continues. And I think it will. In fact, next week we've got the unemployment figures and the redundancy figures. So actually, that'll be quite good. In fact, I'm not even worried about them anymore, because I don't think they're going to have grown that much. Probably a little bit, but not that much. So I don't think there's anything to worry about. But yeah, guys, we'll see you next week. Have a fantastic week. See you later. Bye.